Hey, good morning. Hey, it's Cash Flow Mike. I've got to tell you, here's what I'm excited about. Christmas, New Year's, that whole thing, but it also means the end of the year. So when it means the end of the year, it's not too late. We're not into 2020. Even if we were into 2020, it wouldn't be too late. It's not too late to put in your plan for next year. What I'm talking about there is your annual forecast, right? What you think is going to happen. You got to have something to work for. And remember to start with that transferable value number. Do you have enough to contribute to your transferable value? That's what I'm talking about. So there's three things that go into your strategic plan for next year when you're forecasting, right? What you have to start with is, of course, that pro forma income statement. What does your business look like, right? Just on a monthly basis, and take it all the way down to monthly and adjust for seasonality. So look back at this year or the last 2 years or whatever it was and look for those highs and lows. And if you think it's going to be consistent, plan for that in your monthly forecast, right? Make sure if you got 3% of your sales in January, plan for 3% of your sales. If you get 25% in July, plan for 25%. But remember, that's only step one. When you do your forecast, it's only step one to do the pro forma income statement. You know, how much sales, what's your gross profit going to be, how much you're going to spend, what's your net profit. You have to convert that to a cash budget, right? You have to connect profit and cash. As I always preach, they're not the same. Just because you got profit on paper doesn't mean you have cash in the bank. So take the next step, build your cash budget. And that has to include any one-time cash expenses you think you're going to get. You're going to get a new truck. You're going to improve your office. You're going to upgrade your technology. Make sure you're including those type of purchases throughout the year. Additionally, you want to account for how money actually comes in and leaves your business. Account for your AR days. If you sell something in January and you collect on invoices in 60 days, remember you don't get that money till March. Also, how you pay. Just because you get an invoice and you book the expense in January, if you pay it in 30 days, book the cash expense, money coming out of your bank account in February. So that's how you connect the income statement to the cash budget. Here's the step nobody does, and I challenge you to this year to put it on your planning preparation is forecast the balance sheet, right? And the technique that I've taught you, using that U-shaped, you'll be able to know if you're going to need money in the next year. Do you need a loan, or do you have enough money to grow the way you want to grow? Forecast the balance sheet to figure that out. So I'm Cashflow Mike. That's what you got to do. Those three steps. It's not too late. We'll see you next time.